All right, guys, so this is part two to the how to trade under 2 minutes video. So if you haven't watched part one, you could go watch after this. So things you need to know, markets, right? So there's different markets you could trade. There's futures, indices, and then Forex market. Cool. Sessions, New York, Asian, London. New York sessions from 9:30 to 5. Asian is from 7 to 3 in the morning, and London is from 3 in the morning till 9:30 in the morning, then New York starts. Cool. Apps, TradingView to analyze your markets, and then preferred broker, that's your choice, whatever broker you guys want to use, right? Now, time frame correlation, right? This is a very key thing in trading, which is why a lot of people always are getting faked out and getting out of trades, right? So every time frame needs to correlate, all right? So time frame correlation means, okay, I'm gonna start at the 4 hour. So the 4 hour is bullish in this scenario, right? Cool. Then I'm gonna go into that 1 hour. I need to see that the 1 hour is also bullish. So now I'm like, okay, check, check. Now my entry time frame, right? That's gonna be the 3-minute time frame. So in the 3-minute time frame, I also need to see, okay, I'm still within this bullish structure. Cool, no problem. Now, where am I gonna get in? So if I see that price has rejected a support, okay, right? I wanna see price come up, right? Then it's gonna probably retest another support somewhere in the middle. And then once it goes and breaks through that minor resistance on a 3-minute time frame, that's where I'm gonna go ahead, take my trade here, set my stop loss below this area, and then go ahead and ride it all the way back up to that next resistance, right? So I've already covered markets, sessions, apps, time frame correlation, entry time frames, and now one of the very most important things, right? Risk to reward ratio. So that's everything in trading. So if I'm risking $100, I don't want to get $50 or $20. No, I want to get either my $100 back or double my money, which is $200. Yes, it could keep going to 3, 4, 5, but point is, these are what you call risk to reward ratio. So whatever I'm risking, I want to either get that same amount, so that's a 1-to-1, or I want to get a double the amount, which is a 1-to-2, or even triple, which is 1-to-3, so on and so forth. And then you're gonna close. My advice is, if you're getting started, bro, just aim for your 1-to-1 or your 1-to-2 max every single day, and then compound that daily, bro. Compound it daily for a month. If at the end of that month you're green, then you go ahead and you're like, you know what? Okay, now I could risk a little bit more. I could pay myself, you know what I mean? Then I could probably potentially start targeting 1-to-3, 1-to-4 risk to reward setup. So pretty easy, nothing complicated. If you guys like this, make sure to leave a comment down below. Peace.
Here's how you can start trading smart and finally pass your prop firm challenge. If you're 18 to 35, listen up. First thing you're going to do is grab the Pips Gravity Mastermind trading plan, link in bio. Once you're in, go straight to the market structure section so you can finally read the charts like a pro. Next, dive into the liquidity and fair value gap chapters. This is where you'll learn how the big banks move the market and how to catch the move before it happens. Then, use our entry technique guide to time your trades with sniper accuracy. No more random entries, no more gambling. Finally, follow our trade management steps to protect profits and scale your account steadily. If you're tired of blowing accounts and failing challenges, this is your wake-up call. Pips Gravity Mastermind. Get it now and start trading like the top 1%.